G'day all. This is my last video post for Bitcoin for today, and pretty much what I'm thinking long term. And I do see pretty much that we are done with this level, and this last move is pretty much confirmation in my mind. I looked at a few people's ideas on the internet, and this is a combination of explaining my conclusion. One of the methods is to invert the chart. It's a well-known method, and here we go. So if you were to see this chart, you would actually look to jump in to go long, but in actual fact, it's the opposite, isn't it? And along this chart, we have this support level. Then we have this, what you can say is another, and the third. Okay, that looks like an inverted head and shoulders on a macro level. And what we see here is these moving averages that played. They were pretty much playing resistance in this natural fact was support, and on many occasions it kept getting pushed back and so on. Now we're getting the reversal pattern. So by looking at that, you can see that this area is a key level. Okay, and I represent that with this this line. So that line is important for me, and what I want to dictate from this is that why that becomes significant. As this is an inverted head and shoulders, in actual fact, if I was inverted back to what it's supposed to be, looks like head and shoulders. And you can play this out in a number of ways. You can break this structure in a number of ways. And one of them was already covered. We already covered this, and that was an ascending wedge. And we talked through this, and you can see that based on this structure, we had impulses. Hold on, let me just do that again. We want to get a different color, otherwise you won't be able to see. Okay, so let's do that again. We have this impulse 1, that's one impulse, second impulse, and third impulse, and then we went down. So that's our first leg. So what we're looking for is pretty much ABC. So where is our ABC? Correction. So whenever we have 1, 2, 3, 4, 5 elliott wave, we usually have the A, B, C correction. And so far, this is playing out. This is our A. And what it looks like is this is our B. And knowing that this is a fair bit of resistance, we're looking for our C. Now, where's C going to? I believe there. Now, here's the thing. There's also, on here, we have this ABC chart. Or what we have is the A to B, B to C. This is an Elliott formation as well. So let me do that again. Just delete that because I need the white. A to B, B to C, and D. And what tends to happen here is we get that, and the lengths equal each other. Okay, so don't forget that this is a well-known Elliott formation. And in the past, I did articulate how this A to B equals C to D. Yeah, we had that there. And I'm thinking the same scenario here, where our A to B equals a C to D, and it has confluence along this line. So our 21 weekly average will give us a bounce. The question is, how high would it go? and that will be my exit strategy for yeah. So this 10 weekly moving average is going to be my exit strategy. I doubt it that this, you can see how this is going to cross over with the 10, which is the 50 daily weekly moving average, or daily moving average. So that is my exit strategy. I'm going to look for this form. Actually, let me go back one step, because I'm missing one component. I'm just jumping over the place. So we covered this wedge, and what I want to do is just group these and explain the rest. So we have this head and shoulders. In effect, you can also say that this is the right, this could be the left shoulder, this could be the head, and this could be the right shoulder, which is lower than the, so we can ignore this one in a way, and we can say that is the right shoulder, which is lower, correct? So if that's the case, we do have head and shoulders. It's not clear, but it makes a point. Right here, what we have is another ascending wedge, pretty much. And you can pick that out, and we've hit its target, which was here. So number 2, so this wedge target was here, roughly, which we sort of got there. So let me just draw this one a bit proper. It was more like that. And that's target is pretty much hit. This second target of this wedge is hit. And what I'm looking for, potentially, is this. So it happens in waves of 3, right? This was a wave of 3. And within this, there's a wave of 3. And on the bigger structure, we will expect another formation, potentially another continuation bear flag. Don't know what it's going to look like, but I'm thinking along these lines as well. And then price pretty much gets exhausted and then drops, and then potentially down. And I'm looking, obviously I'm not going to get the right time scale, but I'm looking for something along those lines. What other thing that supports that is my Fibonacci moving averages. So the weekly 34, no, that's not the one. This is the one. So let's go back. You can see how this weekly 34 moving average is coming across. It's coming. It has confluence with this white line as support. So we have a whole bunch of things that are confluent with this 34 weekly moving average. This 21 will give us a bounce, but it's going to be finding resistance with the weekly 10 and the daily 50 moving average. It's going to find the resistance here, and that will be my exit strategy, and then looking to enter on the 34 weekly moving average, which will be a good trade. As I said, this length to there equals from the top down, which is also equivalent to the bottom, which is the target. So that's what I have. A whole bunch of things that are coming together, and the 34 weekly moving average could be our continuation pattern. Obviously, something like that, I'm thinking. I can't see it going deeper. And what makes the 34 weekly moving average come into play? Well, let's look at the history. I don't want to take too much of the time. So let's go to the weekly 34 weekly moving average. And it does have confluence with Fibonacci. And you can see that historically we haven't touched it, only a 21 moving average. Some of it is come between the 21 and the 34, but the 34 is aligned with the 0.382 Fibonacci. Here we have the 34 come into play, and that's about it really. Historically, that's all we've seen. Have we seen it here? No, we've seen it as resistance here, and we've seen crossover as well as support. So I'm looking at the 34. This is something new to me. I've learned it off someone else. a seasoned trader who's made that point. And if that's the case, we have, and if it's industry recognized, well, that's the case. So I'm looking for the ABC correction, and obviously it's all dependent on the stock market and a number of other things, including the US dollar, and that's what I have for now as a scenario. But there, I do definitely see price dropping, and if this is the neckline, so just say this is the neckline for this head and shoulders, then let's play out the target from the head to the neckline, and potentially it could further, if that was a really head and shoulders, from that neckline, we see a much deeper pullback down to this level. I don't think that's the case. I don't think that might be the neckline. Let's look at some other perspective. Let's just clear all these lines because there's just too many of them. And let's just get rid of them. It's hard to read up to a point. So I want to see where this head and shoulders neckline is. So if we say this is the neckline for the head and shoulders, so if that's at the left, yeah, it's pretty much that, isn't it? No, it can't be because it doesn't touch there. So it's got to be the smaller one. It's got to be this neck and head and shoulders there. Pretty much. So yeah, it's probably it. So I need to measure that little. It's got to be this one here that I measure to around that level, and apply it there. So it can potentially go down to this neckline here, and that makes sense because that was strong resistance. Strong resistance here, support, which makes it 34K as well. So if the 34 moving average, if this ABC doesn't play out, then this head and shoulders is going to have the 34K target. I'm wrapping up on that. Thanks for listening. All the best.